Hello, Brian Gleis here with the Scott Insurance Agency and another episode of the Insurance Survivor Podcast. In this podcast, we want to help you outwit and outlast and outplay the insurance game. Loved the show Survivor back in the day, used to never miss an episode. And there are things that went on in that game that we can apply to our world today that can help us live a little bit better life if we understand what's going on. The topic of today's podcast is premium increases. Now, I know none of you have had any premium increases on your insurance here recently. No. Don't throw things at the monitor or anything like that. We know it's off the chains, but I want to talk to you about premium increases just a little bit. So it used to be back in the day, a 3 to 5% increase every single year, even if you didn't have a claim, is what I would tell you to expect, simply because insurance companies share claims that they don't have enough money to cover across the board. What do I mean by that? It's when you turn on the nightly news and you see that New Orleans was flooded. Florida got scrubbed with a hurricane. There's wildfires in California left and right. That's what I'm talking about. Now then, this video is being cut in August of 2024. So everything on the internet lives forever. So I wanted to define what the date is right now. We are seeing premiums instead of 3 to 5%, in the area of 30% increases on homes. So with Mother Nature going wonky, with the increase of tornadoes, with the increase of hailstorms, with the increase of straight line winds, in my area here in Missouri, we are seeing crazy increases. Not only that, but we are seeing companies exit the market altogether. One of our companies has notified us that they're not going to be writing home insurance anymore, and they're in the process of canceling every single homeowner's policy that they have. There's more than one company that is doing that. Now, what happens when companies decide to not offer insurance anymore? They create this tsunami of policies of customers that are shopping their insurance. And you would think all of the other companies out there are saying, yes, let's go ahead. This is our time. Let's go ahead and capture this percentage of the market and we'll have a great year, or it'll set us up for a great year. Well, insurance companies are fickle beasts. And what they want to do is they want to make sure that they don't grow too quickly. If they grow too quickly, they expose themselves to catastrophic losses that they may not have the reserves to pay out. Now, insurance companies also have what's called reinsurance companies, so that if that were to happen, the reinsurance company has their back. But the reinsurance company is also cognizant of what the insurance company's reserve is and how quickly they are growing in the market. So when a company says we're growing too fast and we want to slow down, what do? They increase the rates. And it's a monkey see, monkey do effect. So for the Scott Insurance Agency, it has created a glut of work where we are shopping almost every single one of our clients' policies. We are in retention mode to figure out what policy is going to serve our clients best so that they don't leave us to go somewhere else. Now, that's always the name of the game. But in 2024, actually, it's been going on for the last 8 months. We have been overwhelmed. Our capacity is not what it needs to be in order to survive the glut. So we are asking for our clients' patience. We have good relationships with our clients, and some clients are shopping us. They're going elsewhere to see what's going on. And the good news is that the majority of those clients never leave us. They come back and say, okay, I see what you're saying. I've shopped the other carriers that I see on television all the time, and they're either equal or worse. But with our customer service, or the customer service we strive to provide, we're able to retain our clients. So when people say, why in the heck are the insurance premiums going crazy? This is part of the explanation. And it's a culmination of things. It's carriers getting out of the market, causing a glut of policies that have to be absorbed somewhere. Okay. Now, what do you mean insurance companies can't afford to pay their claims? In some cases, that's a very true statement. It's called a loss ratio. Some insurance companies' loss ratios are above 100%, depending on what type of storm season that they had. So why are they in business? Well, that's a good question. I ask myself that sometimes too, when companies' loss ratios are above 100%. But it's an average over the years. There's good years and there's bad years. But let me give you an example. Personally, I don't know the last time you moved your coverage was. Typically, that happens once every 5 years or something to that effect, where we're taking our client and we're moving them from, say, Acuity to Travelers, or from Travelers to Nationwide, or from Nationwide to Barton. That doesn't matter, the name of the company. So you get a new policy with an insurance company and you pay $2,000 a year for the homeowner's insurance on this policy. Now, some of you are saying, man, I wish I only paid $2,000 a year, but hang with me on this example. You paid $2,000 a year for your policy. You had the policy for 2 years, so you've paid the insurance company $4,000, and you have a hail claim. Now, a hail claim on an average house, if it's just the roof and we don't have to replace any siding, is generally somewhere between $10,000 and $15,000. So you've paid the insurance company, and the insurance company's contract says, hey, we're now going to give you $15,000. So that's a loser, but the insurance contract has to do what it says that it would do, and that is to repair your roof underneath these circumstances. Now, what the insurance company can't do is hold you personally responsible for your account becoming profitable again, because they can't say, we collected $4, we paid out $15, so next year your premium is going to be this. Now, they are going to increase your premium, but they aren't going to increase it to the point where they're going to be profitable again on your account. So with that in mind, they take that loss, right, wrong, or indifferent, and they spread it out like peanut butter. Okay? Do I expect you to be happy with the information that I'm giving you right now? No, but I do hope that you respect that I'm one of the few people that are actually sharing this information with you on social media. Do I expect you to cry tears for the insurance company that's taking in millions or billions of dollars a year? No, I don't. But what I do want you to do is to understand the common sense example that I just gave you that happens time and time and time again. So roofs, wind and hail are the biggest culprit that we have, okay? And whenever we do that, whenever we look at those wind and hail claims, we know that that's the major portion of an insurance company's liability. So what they're doing is they are limiting the number of years that they want to cover your roof. Now, I've talked about this in a previous podcast, but right now the common number is 10. Whenever we have an individual that says, hey, I want to buy a new insurance policy from your agency, the first thing that comes out of our mouth is, how old's your roof? Because if your roof's over 10 years old, there's a lot of insurance companies that doesn't want to insure it. Now, I told you previously, we want things to make common sense. Well, what doesn't make common sense is you've got a 30-year shingle on your roof. However, the insurance company won't cover it if it's more than 10 years old. I get that, but the insurance companies are trying to tighten down on their underwriting tolerance, and they're doing that by limiting the amount of claims that they have to pay. So the beginning, I digressed a little bit there, but it all comes to the example of why premiums are increasing. So do I expect this to make you to sleep better? No, I don't. But again, knowledge is power, and at least now you know a little bit about what's going on, and you can understand some of the common sense aspects of why the premium increases, especially when it comes to wind and hail, tornado claims, and those types of things. So that's it, guys. This is Brian Glides with the Scott Agency coming at you with another episode of the Insurance Survivor Podcast. If you find value in this, please pass it along to others. We want to be your go-to source for insurance information and insurance coverage. Thank you very much. Talk to you soon. Bye-bye.